Good morning, traders. It is Wednesday, September 25th. Taking a look at the chart, we've got the SP 500. You can see here our short-term intraday analysis shows we're dipping into these oversold territories. We've come down to this 20-day moving average. You can see that on the daily chart as well. And the market's trying to carve out a bottom. We've got cycle lows on the 30-minute chart. Yesterday, we do have our short-term momentum cycles in the lower reversal zone on the daily chart. So we're looking for the market to carve out a bottom here and recover. And we'll see if we can get that. If not, the market will be reversing direction. We could easily see it come back down to the lower end of this range, and we'll be looking to potentially get into an inverse play if the market starts to crack to the downside, or potentially getting long bonds going forward. Now, if we take a look at, so right now the market's oversold. It's trading slightly lower on this session. We'll see if we can get some traction. Looking over at the chart of bonds, we've been seeing money move into as a safe haven play going forward here, more or less still in a downtrend, but they continue to push higher and higher. And based on short-term analysis, we might see bonds start to top out over the next 2 or 3 sessions and pull back a little bit. And you can see here the nice rally in bonds, more or less coming right into resistance. This breakdown here of 3 bars, we had a bar over here, and more or less we had 3 bars through here and a candle high. So we're at this pretty significant pivot point. Market may chop around a little bit. We could see bonds pull back going forward. At this point, they are in a downtrend, but they're very close to reversing to the upside. Momentum has been strong. It's holding its ground. And if the stock market does start to crash and break down, bonds are going to continue to go higher. Now, yesterday, the other safe haven play that we were long, we hit our target and moved out of it. We got out of the XLU ETF right up here, a couple pennies from the top of the day. It pulled back after that and it continues to hold up. But overall, big money has rotated into utilities, a safe haven play. We caught a really nice move. If we look at the trend here, we got long down here on this oversold market. We caught first target and then it consolidated and finally broke out and hit our second target pretty much at a time when the equities market was trading sideways or lower without really any real trade setups. We ended up getting into utilities for a really nice play going forward there. Now overall, again, if the equities market, which is oversold, starts to rally, we're going to see the safe havens pull back. And if we look at utilities, there's potential for it to continue to grind a little higher, but overall, the safe havens are on the verge of a big rally or a big breakdown. And at this point, we got to stick with what the broad market is doing. The SP 500 here is oversold. It's had a rally up. It's forming what looks to be some type of bull flag, and it's at support. So if it does start to rally, it's going to have a fairly significant move. And if we just let's just throw a Fibonacci extension on there, you get an idea of where the upside target could be. Let's just move this over a bit. Here's the Fibonacci target. We could do a couple different levels. Well, we'll go from 1 to this high down to this low. And if we crunch the chart down and see where the targets are, you can see the upside potential here for the SP 500. That if this big pattern plays out, we've got correction. We've got potential here for a huge move up to 3150, which a rally like this in stock market would completely crush the precious metals, bonds, and utilities. Everyone would be piling in. We'd be breaking to new highs in the market, and everyone would be piling out of the risk off and into the risk on, taking risk, getting into the stocks, trying to catch big momentum play here. So we're at this point. The big question is, do we find a bottom and rally, or does it roll over and start to pick up speed and drop down into the mid-range here, or potentially all the way down to these lows going forward? That's the big question. Looking over at, let's go to precious metals. Gold down 0.4%. It has been moving higher as a safe haven play, but again, all the safe havens are now trading. They're either overbought or they're at resistance. If we look at the price action, we've got resistance here. We had it became more or less support, or price traded through there, and then we're back up to under that level. So the big question is, are we going to start to see this breakout? Are we going to start to see some big red bars and see metals potentially start to sell off as money flows back into equities? So that's where we're at. And if we look at silver, silver's been holding up. It is stuck at resistance, and it is still within a high momentum play here. We'll just have to see where things go. I do want to be long metals for when there is a big rally and a big move. Silver obviously had a huge one-day pop, but again, we're looking for taking a low risk play and getting into these moves going forward without stepping into too much risk. At this point, safe havens are at a point where they could very easily pull back and roll over, and a lot of it's going to come down to what the equities market is going to do. Gold miners, same thing as metals. They're more or less trading at resistance, and we're just waiting for a new trend to emerge, whether metals reverse down or they break out and start to extend. Here is natural gas. It has been moving lower. Got a little oversold there a couple of days ago. It continues to flush down. We're coming up to this 20-day moving average. Today we're trading below the 20 days, so we're testing it pretty significant today. We'll see if it can get some traction. This pattern here does have some potential for some more downside. If we were to go from the candle high down to this low right here, whoops, let me just re-grab that tool and stretch this out a bit. If we get a momentum move to the downside, we've got potential for it to. Came down more or less to test the 618. It's got potential to go all the way down to the 237, which would be, here's the sell-off, then here's the rally back up, the rebound, and then we've got potential 618, and 100% measured move would bring us down to this 237. So there is potential that it'll have this three-wave correction, this A, B, C wave. It's this C wave of breaking this low and flushing down is what really cleanses the market and sets it up for potentially a big run for going forward. So we'll keep our eyes peeled for a potential bottoming formation to start to form here any day going forward, and we could potentially get long. Looking at crude, down 1.7%. Yesterday continued to move down from this what looked to be a bear flag, breaking down. Today it's picking up speed to the downside. If we look at the 30-minute chart here, you can see we're getting down to these cycle lows. Overall, the market, I think, has some potential to continue to flush down. It's come down. It consolidated here for a bit. Now it's picking up speed. Maybe we're going to see it come down a little bit more. This is where the price was with the gap, where the gap started, got from here to here. And if the market can flush down and get into this area, I think it could be a great rally point if that can happen quickly. But we need to see a real big drop today to get back down to fill that area. And it will be a technical level. This blue line on the chart is a technical support zone, which we could get a rebound very quickly back up to the next level here. Anyways, that is it for this morning. Actually, let's pull up Bitcoin. Bitcoin had a big quick move there yesterday. Let's just pull up the daily chart. We've been talking about this big pattern unfolding and how it's coiling in, and we don't know which way it was going to break, but as price coils and gets into the apex, it becomes very unstable, and any breakout will be fairly quick and significant. Yesterday we saw it have a huge drop to the downside, down about 10%, and today it got a little bit higher, but it's starting to move back down again. Overall, it's unwinding. We're looking for, if this breaks down, if this breakdown has full momentum speed, it could still continue to collapse all the way down somewhere to the 63 or the 6,000 area. So if we go back in time here, you can see these previous patterns where we've seen the same type of pattern unfold before, where you get this formation, price gets squeezed into the apex, gets squeezed, and then eventually you get a big break, and then it continues to flush down. We had the same thing over here. We had everything squeezed into the apex, eventually got stuck under resistance, and then it popped and took off. So that's where we are here. We've got this apex formation, and it did break to the downside, and it is coming into all of this noise over here, so it's going to have some support in this zone, but overall it might just trade sideways for a bit, and then we could continue to see it flush down for the second half of the move. Here's the leg one, and then that equal leg distance to the downside will bring us down to potentially this 200-day moving average or further, and it could continue to flush down even more depending how it unfolds. Anyways, that's it for now. Talk to you in a bit. Bye-bye.